Good afternoon. Welcome to TNC Radio.live. This is the Truckers Network Radio Show. And now here's your host, Shelley Johnson.
Thank you, Tom. I appreciate that. Yes, this is the Truckers Network Radio Show on TNC Radio.live, where we offer the news, weather, traffic, information, and entertainment our commercial drivers want and need. Nobody knows the ups and downs of the economy more than the professional driver. With supply chain interruptions, rising diesel prices, and the fluctuating cost of freight, trucking has had its challenges in the past few years. We wanted to get more insight into what's actually in store for 2023 and beyond. Harry Dent Jr. is world-renowned for his proprietary research that offers real analysis into the economy, business, and investment trends. He provides insight on what to expect in the future by combining demographics with actual spending. His accuracy is spot on. Harry has written numerous best-selling books over the last few decades, from The Great Boom Ahead in 1992 to 0 Hour in 2017. In 2019, Harry published his latest book, Spending Waves, where he shares decades of extensive research covering over 200 businesses across 14 different industries that give readers insight into business and investing trends for the years ahead. Harry's appeared on Good Morning America, PBS, CNBC and CNN, Fox News, and is a regular guest on Fox Business. He's also been featured in Fortune, U.S. News and World Report, Business Week, The Wall Street Journal, and many other publications. We have Harry with us today, and we're very excited to get his insight on what's happening now. Welcome, Harry. Thank you for being on the show with us.
Oh, nice to be back.
So, Harry, I guess first question. Is the incredibly high cost of eggs an indication of what's ahead? I consider myself incredibly lucky to have 24 of them in my fridge instead of having to keep them in the bank vault. I mean, the price of those have just soared.
You know, it's funny. We have an economy that's going down and the cost of things like eggs going up. But you know, there's more to it than that. I mean, we've had the greatest boom in history. People don't appreciate that. My first book was 1992, The Great Boom Ahead. And back then I said, the United States is going to have the greatest boom in history, and even Asia is going to take a back seat for a while. And people said, oh, that can't be. It's all demographics. The baby boom generation here was just moving into their peak spending years. And now, though, since 2007, they have peaked and gone down. And this is why the government is printing money endlessly to stop this downturn. And you know what? It's not a good policy because, you know, you have to come down to reality sooner or later. So I'm telling people, hey, real estate's gone up to new higher prices here. Oh, time to sell if you can. Stocks have peaked at lower lows, and it's time to start getting fiscally conservative and waiting for this shakeout to happen.
We keep hearing hyperinflation as well as recession. It's so incredibly frustrating for the consumer, business owner, and investor. It's also extremely confusing. Where are we headed from what you see? It looks like chaos to most people.
Well, you know, it's not hyperinflation. I mean,
okay.
Hyperinflation was in the 1970s when a lot of young people were entering the workforce at great expense. I've explained inflation better than anybody. It's young people. No, it's not. It's not inflation the threat here. That's more recent. It's that we have overinflated the economy after the 2008 downturn, where really was the end of a long-term boom, and government said, oh, we can't have this. And they've been printing money. So the inflation is short-term, but it's in financial assets. And financial assets have been zoomed up again. And I'm telling you, everybody listening, you know, stocks and real estate, everything, second boom in both. They're going to go down, and you need to get out of the way the best you can. Hey, your primary home, if it's in a decent area, may keep, but even I would consider that. But any vacation homes you have and all your investments in stocks and stuff, I'm telling you, this is going to go down very hard, likely in the next year or two.
I've been reading that. Wow, that's not good news. So What do people do when they've got investments? This is going to make them extremely nervous. And certainly with companies, if they're trying to make capital investments and all of that, how do they plan?
Well, okay, here's the flip side. A downturn is the greatest opportunity of a lifetime.
Hmm.
Once stocks go down in a crash, whether it be short term or long term reasons, and this is more long term, or real estate, or when the economy goes down, the strongest businesses come out better every time. It shakes out the weakest competitors. So that's the way to look at this. I'm
Hmm.
saying this is the greatest downturn of our lifetimes, and from 2020 into 2022, 23 or 4. And if you hunker down in your business and just survive while your competitors go down, you're going to come out stronger. If you sell your financial assets, real estate, stocks, everything at near the top recently, or even now before it goes down harder, they're going to be much cheaper a few years from now. So it's a once in a lifetime thing. This is like the early 1930s, the early 1980s, a few times in history when you could have bought anything and done well for decades ahead. Well, you have to be out of everything and waiting to buy. So you have to sell everything you can here. I hate to say it, but it's that simple.
The prices of things, really, when you think about it, have been crazy. Vehicles, dealerships, they don't negotiate on price. And certainly in the transportation industry, the price of new big rigs, it's through the roof.
Well, see, but here's what's happened. Ever since we went down in 2008 and since, the
Hmm.
government keeps stimulating the economy and pumping money in, and that makes it, yeah, so interest rates are lower and people will buy a new car, but that's not going to last long. If a car dealer's pushing you on a deal, I'd say I would wait. Yeah, I'd say in 2 to 3 years, you can get a way better deal on a house, on a
Hmm.
car, anything. This is the top of a bubble, but here's the difference. The first bubble into 2007 or so was a normal bubble from a really good economy with strong demographic trends from the baby boom and low interest rates from productivity. This is not that. This is an artificial bubble that's been blown up to prevent the downturn of the 2008-9 from getting worse, and it's going to get worse. And so you have to get out of the way. This is going to get bad soon. And I
Ooh.
think by 2024,
Hmm.
late 2024, you're going to see the bottom much lower in real estate. Actually, real estate will be longer than that, but stocks by mid to late 2024 will be much lower. So you got to get out of the way here.
What does bad look like?
Oh, okay. I'd say my target for the S&P 500 from the top, 86%. The
Ooh.
NASDAQ, 92%. I know this is horrible to think about and think I'm crazy, but this is tracking for me. And I study long-term history more than anybody I know, like the 1929 to 32 crash from the roaring 20s bubble. It was 89% in the stock market. And people
Yeah.
think that can't happen. Yes, it can happen. We're only going here. Let me make it more real. We're only going back to 2012 in real estate prices and 2009 in stock prices. We're not going that far. That's how big a bubble we've had because the government tried to blow us out of the 2008 to 9 recession. They didn't accept the recession. They didn't allow that, the economy grows and needs recessions to heal. It's like us waking and sleeping, two-thirds, one-third. This is crazy. The governments are out of sync, and this is going to be the greatest disaster for government policy in history.
So I get that on the stock market side. What does it feel like on the street? For the typical family, high unemployment, we lose our jobs, we're having to stand in bread lines. What does it look like from that perspective?
Yeah, I mean, I hate to say it, The rich are going to get hit worse here because they own all the financial assets and the greatest financial asset bubble in history. But but they're not losing their house and they're not losing their standard of living altogether. So the everyday person is going to see their home prices come down and they're going to see the economy slow and they're going to be most likely to be laid off in their jobs.
Okay.
So that's the bifocal look. The richest people lose the most wealth, but the everyday person tends to lose their job.
which is not good. We're already seeing layoffs. Various
Yeah,
tech companies and all of that, they're really starting to downsize.
yeah. And this is only the beginning. I hate to tell you, but that from my view, this is only the beginning.
Okay, so you're seeing a domino effect here.
The what?
You're seeing a domino effect, something like that?
Yes. Oh, yeah. Look. Okay, here's the real story. The fundamental trends, the biggest generation in history, which I forecast in the mid to late 80s before anybody, the baby boom generation was going to create the biggest boom in history in the economy and stocks and everything because they were the giant generation going into their peak spending, which occurs precisely at age 46 moving towards 47 in the future in the economy. So it's that simple. Okay.
Mm-hmm.
So we had that. And then we started to go down in 2008. Biggest downturn in history before 1930s. I forecast that. But then they stimulated. The government stepped in and said, we cannot let this happen. They put out the printing presses and blew up. Is the economy been that much better? No, a little bit. They blew up the stock markets and the financial assets, at least to make the most affluent people feel better. And the top 20% control 50% of the spending. So that's what they did.
Mm-hmm.
They inflated the economy artificially. Hey, what do you think would happen after that? A bigger crash. That's
Yeah.
my forecast.
I've heard that in the 1930s, the Depression wouldn't have lasted quite as long if the government had taken a step back and had more of a hands-off approach. So it kind of sounds like government tends to muck up the works.
Well, when I look at the 1930s, actually the government did not step in as hard anywhere
Okay.
near as they did in 2008.
Okay.
So actually in the Great Depression, the stock market went down 89%
Right.
in less than 3 years. And we had 25% unemployment. Actually, I would say that was a great bubble bursting completely. This is a bigger bubble. This bubble into 2000 late 2021 is more global, is in real estate, stocks, everything. This you can't even compare this. I can't compare this to any bubble in history. This is bursting, and now they are stimulating hard, but I think it won't last because
Mm-hmm.
they're fighting a waterfall. So that's the difference. In 29 to 32, the economy just did its thing, bubbled up and burst down, and there was no artificial stimulus
Right.
until after the Great Depression, hit in 32, 33. This they've been fighting it all the way, which means I hate to say it, we have much lower to go. It's not good to fight the economy. The economy's smarter than we are. They know how to boom and bust. Booms, expand things, and then you shake out the excesses. We have to have booms and busts. And economists think a perfect economy is to grow at 2 to 3% a year forever and never have a recession, which shows they don't know their assets from a hole in the wall.
They have a utopian idea of things.
Yes, exactly. That's
Wow.
not possible.
No, it really isn't. Interesting. But yet they're the ones manipulating everything, and we just kind of go along for the ride.
Yes,
Scary
they
stuff.
are, unfortunately. So, but hate to say it, the good result here, this crash could be so bad that it discredits the Federal Reserve and all these economists that think they can manage the economy.
There have been a lot of people who have said the Federal Reserve is not the best thing, for sure.
Exactly. Oh,
Yep.
and for husbands and wives, if you think you can manage your wife, you're in trouble.
I want to get more of your insight here, Harry. You've got some incredible information here. Not necessarily everything people want to hear, but this is candid and we need to know about it. We're talking with economic and business researcher Harry Dent Jr. about future market trends. You're listening to the Truckers Network radio show here on TNCRadio.live. Stay tuned for more coming up. The Truckers Network helps professional drivers save money and makes their lives easier. We were created for drivers by a commercial driver. We know the industry and driver needs. A Truckers Network membership offers exclusive discounts through our trusted partners on things like truck care, truck parking, tires, oil changes, fuel additives, fitness, roadside assistance, first aid kits, driver training, and a whole lot more. Start saving today. Check us out at app.thetruckersnetwork.net. That's app.thetruckersnetwork.net. The trucking industry keeps America running thanks to the 3.36 million professional truck drivers who deliver everyday goods to 80% of American communities who rely on trucking for that last mile. The industry represents a diverse group with nearly half of drivers at 42% as minorities. Trucking Moves America Forward, or TMAF, educates the public on the essentiality of trucking by telling the story of trucking and its positive impact on our economy, communities, and lives. Learn how you can join the industry movement by visiting truckingmovesamerica.com. Welcome back to the Truckers Network radio show on TNCRadio.live. I'm your host, Shelley Johnson, with Tom Kelly. We're talking with economic and business researcher Harry Dent Jr. about future market trends. Harry authors real analysis into the economy, business, and investment trends. He provides insight on what to expect in the future by combining demographics with actual spending. Harry, your predictions have been super accurate over the years. How do you arrive at your conclusions?
It's real simple. People enter the workforce at average age 20, somewhere between high school and college graduation. And then they go through this incredible earning and spending cycle into age 46 on average, when their kids are leaving the nest and they don't have to work so hard and get them through college or high school, whatever. This is the good point is we have exact statistics on this. Average peak in spending 46, heading towards 47, for the next generation, the echo boom. So I can take a 46-year lag on the birth index adjusted for immigrants, which I can also do scientifically, and predict when the economy is going to boom and bust for the rest of our lifetimes. And economists are saying, oh, it all depends on government policy and Federal Reserve this and interest rates that. No, has nothing to do with that. We were in the greatest boom in history in 2007. Then it went down, and then government stimulated so hard to blow us up into this. And now I'm telling you, we have to go down again. This has been all artificial since 2009. All government stimulus, no consumer, real people stimulus. And now we're going to have to see a downturn, and you have to prepare for it because it will present the best investment of a lifetime ahead.
Should people liquidate their stocks?
Yes. Yeah.
Okay.
They've already gone down a lot, but yes, on this bounce, yes, liquidate stocks. Real estate peaks later than stocks, so it has not gone down as much. Just starting to turn down. Real estate is the best thing you can get out of now because it's going to go down, and real estate goes down slower and longer than stocks. The last downturn, stocks bottomed in early 2009. Real estate didn't bottom until mid 2012. So think about it that way. Like, yeah, if you're late to hear this, yeah, well, stocks have already taken a big crash down, but they're in a bounce, so you can sell them here. Or I'd say really just a few weeks ahead of here at the best. But real estate, my gosh, it takes longer to sell anything you don't need or value for the rest of your life. I'm telling you, real estate could go down more than in the 2008 crisis when it went down 34%, more than the Great Depression at minus 26%. And I think real estate on average in the US could go down 50% in this next downturn.
Ooh.
Get out of the way and then buy real estate and then buy stocks. This is weird, I know, but I study long-term history. That's why I have a way to come in and say, look, this does not look weird from long-term history. It looks weird to you from short-term history.
Right. So people could end up upside down in their homes again.
Oh, yeah, absolutely. Now, the only good thing, always, people say, should I buy a house, that, with high debt and stuff? Yeah, I'd buy the high debt house, because when it goes down, the banks may have to take the loss in the end. So, but yes, real estate is where people are going to get hit the worst. And you have to look at your real estate and your mortgage and stuff and say, hey, if my real estate, now you only have to look back at the last downturn, okay, into 2000, from 2007 and 2012 in real estate, where it went down, and 34%. What if it went down 50% this time? So if you look at that, are you happy with that, or you're not? If not, you better get out. And if it does happen, then that's the time to start buying real estate.
Right. Sure. Buy low, sell high. Absolutely. Tom, you said you had some questions for Harry?
Yeah, a couple. I guess my first one, though, you got my interest here in what you're just talking about. So do you trust the FDIC? Where should I put my cash?
Yeah, that's a good question, because the government has these agencies that are going to guarantee a lot of mortgages and all this sort of stuff and stuff. Yes, they will to a certain point. At some point, they may not be able to. And my view is, to the most affluent people in our economy, if they do have to step back from guaranteeing mortgages or whatever, they're going to favor the everyday person and not the affluent person. So I'd be more scared about this if I'm a more upscale family owning a more upscale house. But yeah, they're going to try to do it, but it depends on how bad it gets. And I think it's going to get worse than people think.
Okay. A couple of years ago, as we sat here watching America come out of the COVID experience, several of us in this industry, and by the way, reminder that your listening audience right now are truck drivers all over the United States and Canada, who I think you agree with me are just the backbone of what keeps this thing going right now.
Absolutely, yeah.
What we saw was a marked increase all of a sudden in the cost of shipping goods, a ridiculous increase, to which many of us said, then here comes inflation, because this is a bellwether. This is the canary. This is, whatever you want to use. This tells us a lot about what's going on in the future. So at the risk of sounding like John McLaughlin, you agree that transportation costs and shipping costs are a bellwether, a canary in the minefield, if you will?
Yes, exactly. When a boom gets going, out of a downturn, costs are low, shipping and everything, trucking, everything. When it gets up, one of the limits, there's a lot of limits to upturns, but one of the limits is always inflation and cost, because the economy overheats. The supply cannot keep up. And then, unfortunately, people expand their supply just before the economy goes down again. And that's the classic up and down cycle. So, yes, that's where we're at now. And so that's a sign. The inflation in everyday cost is a sign that this boom is reaching its limits and it's going to go down. And when it does, it's going to eliminate that inflation and everyday costs very quickly.
And that's what we're seeing now is a reversal of all that. Costs for shipping are dropping dramatically. We had this crazy bid a couple of a year and a half ago or so, where it took $23,000 to get a shipment from China over to the U.S. Now we're back down to a couple of $1,000s and dropping, which, was nice when it was nice and high, but now these costs are dropping quickly, and yet fuel prices are going up. It's very confusing. There's a lot of mixed data out there right now. Is the confusion also a symptom? I mean, because there are things that just doesn't make any sense.
Well, no, I mean, again, when the economy is good, everything's growing and costs are kind of coming down because of rising productivity in businesses and workers and stuff. When it goes down, everything goes in the reverse, then there's excess capacity and prices go down the worst and stuff. The key thing is to realize, look, when you're in an upturn, everything goes the opposite in a downturn. We're in a downturn now, okay? So prices are going to go, inflation's going to go down, prices are going to go down, profit margins are going to go down. And what that does, and I hate to say it, for the good of the economy long term, it shakes down to the best businesses and everything.
Sure.
And then they turn around and do well in the next boom. So if you're a business or truckers or anybody, what you got to do is get better at what you do, keep your costs down. All you have to do is survive this downturn, and you will have less competition from other people in your industry in the next boom. That's the secret of downturns. The strong survive, and that's the secret of all evolution. The strong survive. That's why we have booms and busts and evolution and ups and downs, to keep the strong surviving. So all you have to do is be strong here. You don't have to say, oh, the trucking industry is going to go down because of the economy. No, who's going to survive and do less in the downturn and come out the strongest? The people that come out the strongest are going to love this downturn.
Right.
Yeah.
That's the reality.
Yeah, and Shelley, I know we're up against a break, but when we come back, I want to ask then about these rate hikes and the real impact on what's going on. But I know we're getting tight on time here.
They're raising rates at the late side. They're late raising rates. The Federal Reserve always late on everything. Late raising rates to tighten, and then it's going to go down, and they're going to be too late to loosen when it goes down. So prepare for a downturn here.
Right.
Well, we want to unpack more of that. All of this is terrific information. Thank you so much for giving us all of this insight. We're talking to Harry Dent Jr. about future market trends. You're listening to the Truckers Network radio show on tncradio.live. Stay tuned for more coming up. TNCradio.live is proud to carry the Steve Summers Overnight Drive Show. TNCradio.live is dedicated to commercial drivers. We offer the news, traffic, and weather you need, and the entertainment, sports, talk, music, and celebrity interviews you want to hear 24/7. We have original shows and trucker podcasts that feature some of your favorites, like Ice Road Alex Debogorski and America's Truckin' Sweetheart Marcia Campbell. TNCradio.live is convenient and designed for professional drivers. The best part is we're free, and you can listen anywhere you are on the road. With just one tap, you can tune into Steve Summers and us right on your phone. Simply download our app by going to app.tncradio.live. That's app.tncradio.live. Welcome back to the Truckers Network radio show on tncradio.live. We're talking with economic and business researcher Harry Dent Jr. about future market trends. Tom, you said you had another question for Harry.
So, Harry, within the last couple of years, before the inflation stuff got there, I asked my financial guy, what do we have? What kind of products do you have? What do I need to be doing to prepare for inflation? I knew what answer I was looking for, but I got a shocking answer, which was, we don't have that on our radar, meaning they didn't see inflation as something that was coming. And this is, supposed to be one of the, smartest financial firms out there, And they didn't see. Is this ostrich? Is this arrogance? Is this stupidity? How is it that so many people just or do they just believe that it's going to be okay?
Okay. The truth is, inflation peaked in 1980, 81, has been coming down for decades. So, yes, there's going to be lower inflation, and it has been. But what people don't understand is when we have this downturn after the biggest financial asset bubble, stocks, real estate, everything, when those things deflate in prices and go down, as they started to do the first time in 2008, 9, and 10, it takes money or wealth out of the economy. It causes deflation. Deflation is the biggest trend near term. And in deflation, there's only one thing that goes up: the safest, highest quality long term bonds, like 10-year and 30-year US Treasury bonds and AAA corporate bonds. And I would still take the Treasury bonds over there because they're the safest. So this is weird. You have to realize everything has bubbled up in the last couple of decades: stocks, real estate, everything, commodities, up to a point. Everything is deflating. When things are deflating, you want to buy the safest assets, and those are the safest bonds, long-term bonds to lock in those yields of the best governments. And people can criticize the US all they want. We're still the largest nation in the world. We still have the best quality bonds in the world. And they went up in 2008 at the worst of the crisis, 40 to 50%. People don't realize that. The 10, 30-year Treasury bonds went up 40 to 50%, and they will go up that much or more in this crisis while everything else goes down. Only place to hide.
That's amazing.
So
And
munis are the place to go and treasury bonds.
That is a secret nobody will get here. I hate to say it, but that's the secret. The highest quality treasury bonds of the US government, which everybody says is going to fail from their high debt. Hey, we have less debt than other nations. We are still the best house in a bad neighborhood, period.
yeah. What scares you the most going into the next year? It just as you look, maybe not you personally, but as you look around at your neighbors, um, is it complacency? Is it a sense of nobody's preparing? Do you feel like Chicken Little sometime?
Well, yeah, I'd say short term, it's complacency. We had this first crash, we've bounced, and people thinking, oh, that's it. Now, I'm telling you, I've tracked first crashes of major bubbles in history. We're only in the first wave down of three. So this is going to go worse. But what scares me is that I think there's going to be civil problems. I mean, people are if things get as bad as this suggests, like in the early 30s or the early 80s, but more like the early 30s, there's going to be a lot of unhappy people losing their jobs, and it's going to be civil disobedience in a lot of areas. And you know what? Where am I? I'm in Puerto Rico. I'm happy I'm here because we're not going to experience this as much as the United States if this happens. And I saw this coming. I'm not here. I bought a place on an island off of Puerto Rico a long time ago, which drew me here. But the more I looked into it, this was the greatest place to be in a downturn that is still highly connected to the US speaking, all that sort of stuff, but would not be hit as hard. I'm telling you, I think there's going to be a little bit of violence in the streets in the next few years. That people are going to be in trouble.
Wow. So do you see home invasions and all of that kind of stuff happening too?
See what?
Home invasions and that kind of thing happening?
Oh, maybe a little bit, but it's more like people are going to be kicked out, foreclosed on their homes. It's already happened so much.
Yeah,
Imagine that having more. I
right.
mean, people get desperate, they get more pissed off. I mean,
Sure.
and so it's hard. I don't think it's going to be blood in the street sort of stuff, but I think there's going to be a difficult time in American history, much like the 1930s. And
Mhm.
so I'm very happy to be in Puerto Rico on an island that is a part of the United States economy, really, when it comes down to it, but not in the thick of it. I hate to say it. I'm here for a reason, and because I saw this coming, and I think people should. I tell you, people in the exurbs, outer parts of cities, are going to do better than people in the downtowns.
Is there anybody in the government that we can trust? Is
Well,
there anybody we can look at and say
no,
this group's got it or that guy's got it? Is there somebody who we can look at and follow?
no, there's not really. I mean, again, the more the bubble builds, everybody has to protect it. The Federal Reserve used to be, oh, we won't print too much money and we will be the receiver. No, now if there's a downturn, if they don't print more money, it'll go down worse. Everybody's complicit. The Republicans and Democrats, nobody wants this bubble to burst. This is a bubble bigger than the magnitude of 1929 that led to the 1932 crash and the greatest depression and 25% unemployment history. Bubbles always burst. This is the second bubble. We had a first tech bubble into 2000, crash in 2002. We stimulated our way out of that artificially beyond the peak in spending of the baby boom in 2007, and then stimulated after that went down into 2008 to 9. We've been pumping up the economy into this bubble, and nobody wants to own it. Nobody wants to admit it's a bubble. This is the greatest bubble in all of history, and all you can do is get out of the way of it. Nobody's going to stop it. There's no way to stop it. It's already started to burst since January 4th, okay, on the S&P 500. That's the top you will see for the rest of your lifetime for most of the people listening to this show.
Wow.
This thing's going to go down. It's going to go down farther. We're in a bounce. Sell your stocks, sell stuff. Get as conservative as you can and hunker down. And then you can buy stuff a few years from now, probably around mid 2024, if I would have to guess at this point, at the sale of a lifetime. Houses, stocks, everything.
So things are going to happen pretty quickly.
Yes, that's
Mhm.
the way they happen. Okay, people don't get it. This is another important principle of economics. Booms, a 5-year boom crashes in 2.5 years down. Crashes happen twice as fast as booms. So the crashes happen faster and sooner. And that's what you have to realize. We're already in the crash of our lifetimes.
How will the push to electrify everything play out with all of the economic turmoil? I mean, there's a push to get electric vehicles, which are super expensive, change everything around. Do you see that kind of halting with all of the chaos?
Not really. I mean, once you get a downturn,
Hmm.
what happens, the more that stocks and the economy goes down, the more people lose confidence, the more they cut back in their spending, and that throws everything down. Businesses, profits, stock, it's a cascade that you cannot stop at a point. I am saying I've been waiting for a long time because this boom has already gone past it would have in normal demographic strength. Okay.
Hmm.
I've been waiting for a first crash of 30% or more in the stock market, and that already happened in the NASDAQ. It went down 38% in this first crash in 2022. I think this is over. We will not see new highs in the stock market no matter what anybody does, and it will go lower and lower. And if you don't get out of the way now while it's still bouncing, you're going to hurt a lot more. And you can't listen to government officials say, "Oh, we'll fix this." No, there's no fix. The government created this bubble, overstimulated everything for the
Right.
last couple of decades. They are not going to stop the bubble from bursting. It's too late. They tried to, but it's too late now. Once it's gone down this much, I think it's going to keep going down. So we're in a bounce. I think this bounce could go a little higher. I think I have 31.86 or something like that on the NASDAQ a few percent from now. If
Hmm.
you don't sell by then, you may see way, way lower in the next few years.
Okay. So things are going to kind of be in a reset pattern and in stagnating for a while after everything really crashes.
Yes, which is
Mhm.
good. people don't understand that you have to grow and then reset. Everything grows and resets. Nothing just grows straight up. You have to grow, digest the lessons from that growth, and then grow again. So we're in a reset, okay? And that's natural. There's nothing wrong with this.
Mm-hmm.
So from 2024 on, we're going to have another boom with the millennial generation, okay? The truth is, the sooner we clear out the excesses and the debt of the last boom, which the economy trying to do against the efforts of the Federal Reserve that thinks they're smarter than the economy, which they're not, the sooner we put out these excesses, the stronger this next boom will be for the millennial generation. If not, you know what? The baby boomers have basically compromised this next boom because we won't pay our own debts off or restructure them.
Right. Wow. That's some pretty powerful insight and definitely what we all need to know. We have to go to another break here, Harry. We're talking with economic and business researcher Harry Dent Jr. about future market trends. It doesn't sound pretty, but it's important information for us to all know. You're listening to the Truckers Network radio show on tncradio.live. Stay tuned for more coming up. The Truckers Network helps professional drivers save money and makes their lives easier. We were created for drivers by a commercial driver. We know the industry and driver needs. A Truckers Network membership offers exclusive discounts through our trusted partners on things like truck care, truck parking, tires, oil changes, fuel additives, fitness, roadside assistance, first aid kits, driver training, and a whole lot more. Start saving today. Check us out at app.thetruckersnetwork.net. That's app.thetruckersnetwork.net. Welcome back to the Truckers Network radio show on tncradio.live. I'm your host, Shelley Johnson, with Tom Kelly. We're talking with economic and business researcher Harry Dent Jr. about future market trends. Harry, in our previous segments, you've been giving us some serious predictions on what to expect in the next year or so. A lot of people may not like what you're saying, but it's stuff we need to know. What are the best ways to protect ourselves from the bust that's coming? You covered some of the ways we can. Are there more? Do we need to turn into survivalists?
Okay, yeah. Survivalist is a good term. As a business, you need to hunker down, focus on your best customers and segments and marketing, and cut out the losers and cut your fixed cost. I was a business consultant to large corporations and small companies for 2 decades, and all we did was cut overheads. Okay, that's always the thing, and focus on where you're making the most money. But for investors, you have to get out. I hate to say, of all risk assets, they call them risk assets now: stocks, real estate, bonds outside of the safest treasury bonds of the United States government. These are all risk assets that have gone up more than any time in history, more than at the 2000 peak of the first tech bubble, more than the 2000 peak in the demographic bubble of baby boom spending, which I predicted decades before it happened. You have to get out of risk assets and get into safe assets, which means you want to own 10 to 30-year treasury bonds, AAA or AA corporate bonds. That's the only things that'll go up. And if you don't like that, be in cash. There's nowhere to hide because everything is bubbled. Real estate, stocks, everything is bubbled. Normal bonds have bubbled. So get safe just for 2 years. I'm just saying for 2 years. And then you can buy everything at the sale of a lifetime at prices you'll never see in investments ever the rest of your life. It's that simple. Get safe now, rebuy around mid 2024 or so, and you'll be a very happy camper.
So put on our life jackets and batten down the hatches and just kind of ride it out.
Well, and it's everything, I hate to say it, it's everything financial advisors, and I've worked with them all my life. They love me, I love them. But this is the one time you don't listen to your financial advisor and just say, oh, this is just another correction and we'll reinvest and get rid. No, you have to get out of risk assets and wait for this crash of a lifetime to happen and get back in. And then the returns will be incalculable.
Good to know. Where do people find your books, Harry? Your knowledge is just phenomenal.
Yeah, yeah. The Roaring 2000s, The Great Boom Ahead is my earliest book. Um, and you just look up Harry Dent and you'll see my books. And but that's not the best thing. The best thing is to get on my newsletter, my free newsletter at harrydent.com. And then I also have a monthly newsletter that's paid. But you can get on my free newsletter today at harrydent.com. And I'm telling you, every week you'll get an article from me and my partner, Rodney Johnson. And I'm telling you, you need to listen to an alternative opinion here, because what the economists are saying is going to happen ain't going to happen here. That simple.
Mm-hmm. I took one economic course in college, and I determined when I left it, it was a master's level course, actually. I decided at a very young age, the economists didn't really know what they were talking about. I mean, they with all of their different curves and everything, all of their theories, I didn't think that they knew real world stuff. So I guess I wasn't wrong.
Yeah. Hey, are you my sister by another mother or something?
There
That's
you
exactly
go.
right. I started with an economics major, and after the third course, I quit because it didn't make any sense. I
Yeah.
started taking finance and accounting and management, all the business courses. Then
Hmm.
it made sense.
Yeah.
Economics is the worst science in history.
This particular course was federal government finance, so it was even more confusing.
Yeah.
Last question I've got for you, Harry. The thrift savings plan, the government version of the 401k. Get out or stay in?
No, well, okay. You're in a 401, whatever you are in a retirement plan or 401k, get in the safe, either be in cash if they allow you, or be in
Okay.
the safest bonds. If they have
Okay.
AAA corporate bonds or treasury bonds, choose that. I'm telling you, everybody, this is a financial bubble, the biggest in history of everything, an everything bubble. Everything's going to go down except for the highest quality corporate bonds and less so the highest quality US Treasury bonds. That's it. So you have to, there is not a way to diversify. You have to be in the safest bonds of your choice in any investment plan offered to you.
Got it.
Okay.
Don't
Makes sense.
listen to your stockbroker that says, oh, you can diversify and we'll have, no, everything's going to go down here. There's no diversification that will protect you.
There's no way to escape it. Okay.
No way to escape.
Very good to know. Thank you so very much, Harry, for being on the show here. You are a wealth of knowledge. Certainly, a lot of people won't like what you're saying, but it's stuff that we definitely need to hear so we can survive. And that's why we featured you here on this show. You have insight that I wish everybody else listened to.
I do too, but they won't.
Well, that's why we're featuring you, because we have some
Exactly. And
common
that's why you're
sense.
good guys. You're good guys. Somebody needs to bring this out.
Thank you, Harry, and we're glad that we can. You've been listening to the Truckers Network radio show here on TNCRadio.live. We've been talking with economic and business researcher Harry Dent Jr. Definitely check out his books, subscribe to his newsletter. You need to be prepared for what's coming up. Stay tuned for more great information, great programming right here on TNCRadio.live. We're here for you. Thank you for listening to another great interview on TNCRadio.live and the Truckers Network radio show. All of the material you hear on TNCRadio.live on our website, our broadcasts, or our podcasts are copyrighted. There can be no distribution without the express consent of TNCRadio.live and its partners. For inquiries, write us at info@tncradio.live. And don't forget to subscribe to the podcast of the Truckers Network radio show.